welcome. You're watching a CNBC TV 18 earnings special. I'm Kritika Saxena. I'm coming to you from the Infosys campus. The company has announced the results for the first quarter of FY18 and it's been a solid quarter for the company. Over the next half an hour, we will get you details and fine print, including voices from across the company. Before we get to that, here's a quick snapshot on the outlook of what you need to remember. The Infosys management pointed out that they are bullish on FY18. However, there are a couple of areas that they are cautious about. Retail, banking and financial services within the US space, and consulting in Europe is a concern. However, barring these specific areas, the company is confident that the demand pipeline in US will pick up. Client budgets are stable. However, clients are repositioning their budgets from traditional IT services to digital, and that will take some time and lead to some amount of volatility. The clarity on this is expected by the second half of this year. We will get you all the voices to explain what this exactly means, but to kickstart this, Vishal Sikka entered Infosys campus, entered the press conference of the earnings in a driverless golf cart. That essentially is to showcase the kind of innovation and automation that they have been working on. They are training their engineers across the board to help them understand the technology behind the driverless car. Let's understand the earnings as well then. Let's bring in Reema Tendulkar to get us the key highlights in the analysis of the numbers. Reema, over to you.
First on the top line, dollar revenue growth at 3.2% sequentially versus estimates of 2.6%. In constant currency, the company has delivered a 2.7% growth in Q1, and this would compare with the 2% growth reported by TCS. The bigger beat has come in at the margin level, so margins have only dropped by nearly 60 basis points. The negative headwinds in the margins, one was on account of rupee, and secondly was on account of higher employee costs because of variable costs, subcontracting, visa costs, etc. But the company managed to offset by improving its realizations as well as by improving the utilization. So if the margin breakup will be up for you on your screen. For instance, utilization aided the company's margins by nearly 90 basis points. Higher realizations benefited them by nearly 50 basis points. Talking about utilization, significant improvement. So the utilization ex-trainees at 84% is the highest in the last 15 years, and utilization including trainees is the highest that we've ever seen for Infosys. Also, the productivity per employee has been going up for the last 6 straight quarters now. With respect to the all-important guidance, it's Q1, so we didn't expect the company to tweak it. So they've continued to retain their constant currency and margin guidance. So constant currency revenue guidance continues to stay at 6.5% to 8.5%, while the margin band has been retained at 23 to 25%. Remember, next quarter will be the wage hike quarter for Infosys, and that could shave off close to about 100 basis points from the company's margins. Dollar revenue guidance has been up to 7.1 from 7.1 to 9.1%. So that's been up by nearly 100 basis points. Also, for the first time, the company has started classifying the revenues that it gets from new age services. So, for instance, the new service and software, which typically includes AI, cloud, etc., is about 8.3% of their overall revenues. And if you add Nia, Edge, Panaya, Scava, the acquisitions that they've done, that's an additional 1.6%. So roughly 10% of the company's revenues coming from these new high growth service areas. But the company in the conference call clarified that if they go by the conventional definition adopted by the industry in classification of digital, then the digital contribution is closer to 23%. The demand commentary was largely the same. They've seen traction in BFSI. Retail continues to remain choppy. High-tech was a bit subdued. India had a great quarter in Q1, and that's because of the completion of the GST contract. So India revenues went up by nearly 11% on a quarter-on-quarter basis on expected lines. So the demand commentary was not very different from what they've been saying. One key point that I'd like to mention is that they still expect financial services to pick up further in the second half of the year. So that will allay some concerns, because yesterday when we were talking with the management of TCS, if you remember, they had indicated that large deal closures are not taking place in BFS and they don't have visibility yet on when it would pick up. But at least Infosys is saying on BFS, which is a significant portion of the industry revenues, that things will pick up in the second half of the year. But on the whole, good performance by Infosys, better than expectations and better than TCS.
Thanks for that, Reema. In fact, I caught up with Vishal Sikka, the MD and CEO of Infosys, to understand the outlook going ahead.
You know, we had a wonderful Q1. I'm proud of our team's execution in this quarter. It was broad-based, both in terms of strong operational performance. We started the quarter resolved to focus on execution and to not be distracted, to really focus on all aspects of the business. So I'm proud of the results that we have achieved. Obviously, the revenue growth of 3.2% on reported basis, 2.7 on constant currency is a great start to the year. And good margin performance. We did 24.1% despite many headwinds on the margin side. The revenue per FTE, revenue per employee, has grown in 6 consecutive quarters, and now it is approaching $52,000. So we are really demonstrating the way, in some sense, in the industry in that important category. But what I'm really proud of is our very strong growth in new services and new software. And that continues to be the driver for the future. And we have started to, separated that out and started to report that separately starting this quarter. In the new services, 6 new areas, we have done 8.3% of our revenue came from there. And these are services that did not exist 2 years ago. So that means that if you look at our overall revenue growth in the last 2 years, half of that has come from services that did not exist, you know, a little more than 2 years ago. So that is something I am quite happy about.
What's the scalability here in terms of new services? A couple of reports said that there's almost a 10% growth this time. What's the scalability? What kind of growth can you expect in the near term?
No. It's, we expect high growth, and obviously starting in the subsequent quarters, now that we have the basis from this quarter onwards, we will disclose relative growth numbers. The 10% is the contribution to this quarter's revenue. So 8.3 from new services and 1.6 from new software. So this is again new software that did not exist more than 2 years ago. So this is a reflection of the vitality of the company, is how much of the revenue, and of course the growth curve on these is much higher than the growth curve of the company. So as you can see, from 0 to a billion in
Absolutely. So, Vishal, I come back to the question I asked you earlier. In terms of the constant currency guidance that you've given, why not increase it, given the fact that you started the year on a good note? Is it because of caution from US and BFSI?
It is based on all the variety of factors that go into the guidance. And I mean, we had a low exit velocity coming out of Q4, so that has had some impact on that. And typically, we want to look at that at the midpoint of the year, which will be at the end of this quarter, at the end of Q2. So if things change, if we see a reason to change, we'll let you know. Is
there an initial sign of demand pickup in the second half of the year? If yes, then where?
My sense is that in the new areas, in the growth areas, there is no shortage of demand. There is tremendous demand. There is it is really limited by our ability to find and fulfill the demand. And in the commoditizing areas, there is also a great growth opportunity in terms of bringing automation to improve the productivity and improve the profitability of our services. And I'm really happy about how that has been going. I mean, in this quarter, we trained 3,000 people on automation, including 2,100 on our NIA platform. The NIA platform adoption by our delivery team is the highest ever. It has been growing really remarkably. There's a massive adoption that we are working on. And NIA's usage in new applications, I mean, in many ways, like this autonomous vehicle thing, new kinds of applications of AI is something that we are very focused on. So
okay, fair enough. As far as the U.S. outlook is concerned, how are you going to perhaps hit the pause button till you see some kind of a pickup in demand? What are your U.S. clients specifically telling you?
No, there is I mean, if you look at in banking and financial services in the U.S., the regulatory changes, the regulatory environments change will lead to a pickup in the second half of the year. Similarly, in all the industries, there is the adoption of digital technology, the adoption of AI has become so pervasive, so widespread, that really we need to focus on delivering these new capabilities, new services very rapidly. This is what the U.S. hiring plan is all about. It is not so much about visas, as it is about innovation, about ensuring that we have the local talent to be there. These new services are rapid prototyping, you know, co-creation, design thinking, and things like this. So this is, I think that there is plenty of opportunity for growth in the US.
Okay, and lastly, I don't want to go into the details of this, but how far have the conversations reached? The founders and management have been talking. There has been a headway as far as the discussions are concerned, but how far have the discussions reached? Have some of the recommendations made been accepted? Where do you stand here?
No, founders and management don't get into these discussions. This is a matter of the board, and I think you have to talk to the board about this. My endeavor, our management team's endeavor, is to stay as unencumbered and as focused on execution as possible. And an empowered management team that stays focused on doing its job, is allowed to do its job, is going to get great results. And this quarter is a great example of that.
Okay, you didn't answer whether FY18 will be better than FY17. Can I ask you, are you more bullish this quarter than you were last quarter?
I'm a Taurus, so being a bull is in my nature.
Well, that was Vishal Sikka, confident about FY18 and working towards making FY18 a better year than FY17. Let's take a short break. More details on Infosys' first quarter earnings on the other side. Stay right there.